Today we'll be having the lecture course title Business and SME Management. And knowing that we have been having series of topics, we have treated regulatory uh, regulatory compliance on businesses, and we have treated management, personnel management. We've talked about sales management. We've talked about marketing practice. We've talked about a lot. So today we'll be moving ahead and discuss about accounting principles, and shortly also with some part of organization. We'll also talk shortly about organization. So, if time permits, we'll also talk about tax, uh, tax for SMEs owners, how you need to be aware of tax. So, if time permits us, we can able to deal with that today. Okay, so let's start afresh and let's start going. We're going to commence with accounting principle. Now, when you are talking about accounting, you should know the word accounting related to accountability, related to the value and the worth of your business. Okay? Now, when we are talking about accounting, we first of all talks about what is accounting itself. What is accounting itself? Yes, according to Okowili, in 1993, he said accounting is a process of identifying, measuring, and communicating economic and financial information to permit informed judgment and decision by the users of the information. Okay. Now, when we're talking about accounting, it's all about the processes of identifying. What are we identifying? Identifying the figures, identifying the quantities, and you need to measure. You measure the quantity with the amount. You measure the what with the quantity that you are giving out. You are in exchange of, and you talk about communicating. That means communication in writing, writing out those things, the figures, the financial, in figures, in financial figures. Then you talks about economic and financial informations to informed judgment. With this, you can able to assess whether you are unprofitable or you are not profitable, and you can able to make decisions. And this decision can also be used by the users of information. So these are the things that we need to consider in what we call accounting today. Now, when we look deep in this study of today, we looked at one, identifying. What are we to identify? We need to identify financial transactions, and other economic events from source documents. These are the things you need to identify. Two, analyzing and recording. Analyzing and recording. When we're talking about analyzing and recording, you identify transaction into you identify transaction into prime book, such as journal and such as cash book, and classifying and summarizing. This is talking about analyzing and record transaction from the prime book by posting them into ledger account and subsequently balancing them. Okay, then we also have communicating. and interpreting. Now, all these I'm mentioning to you are just key points in the definitions and trying to explain to you that it is very useful for SME management managers and SME owners, business owners, communicating and interpreting. This is the summarized item and account to all interested users of accounting information so that they can judge the performance and the position of the business and make necessary decisions. Okay, so with these they can able to make necessary decisions on what they want to do. Now when you are talking about accounting, you should know accounting are in different categories. Accounting, we have divisions of accounting. We have and so on and so forth. We have forensic accounting. We have so much of accounting and which are very. Now, we know that we have divisions of accounting. Over here, we have financial accounting, we have management accounting, we have auditing, taxation, management accounting, we have forensic accounting. We have different kinds of accounting, and these accounting are very, very important and useful for the SME owners and business owners and useful for them. Now, we should note that all the SME owners, they use accounting information, and this accounting information is used to base their judgment, is used to calculate their profit, is used to know their capacity and to know their profitability, to know the ratio where they are into, whether they are behind or forward. So it's very, very important. Now we want to discuss importance of accounting. Importance of accounting. Now, when we are talking about importance of accounting, that is the benefit of accounting. You need to know that. Now, accounting information can be used for decision making. Okay, when you're talking about accounting information, it can be used for what? For decision making. That is to say, if you want to make decisions, you can use accounting to base your decision, what you have accounted for. Number two, it provides permission. It provides permanent record. It provides permanent record for all transactions. Okay, it provides permanent record for all transactions. Then, number three, it helps to determine the profitability of the business concern. It helps to determine the profitability of a business concern. Number four, accounting records are used for tax assessment. Number five, it helps to prevent fraudulent practice. Number six, the record provide a means by which the finance of a business are controlled. The record provide a means by which the finance of a business are controlled. I take it again. Number six, the record provide a means by which the finance of a business are controlled. Okay. Number seven, The record the record shows the income and expenditure. The record shows the income and expenditure. That is what comes in and what we spend. What comes in and what we spend. Okay. Then number 8, accounting record shows assets and liability. It shows all the assets we have and it shows all the liability, all the debts we have. That is accounting for you. Number 9, accounting record aid planning. It helps us in planning. Okay. Number 10, accounting record provide a proof of financial position of an enterprise. Accounting record provide a proof of the financial position of an SME, SME business owners, the enterprises. It shows the positions. Is the accounting will reveal, will expose the position of that business. So that is why accounting is very, very, very important. In fact, is one of the key, is one of the key of the business. So you must keep a proper accounting record. Okay. Now, we are talking about users of accounting information. We have a lot of people that use accounting information. It's not only the SME owners. We have a lot of people that use accounting record. Okay, let's now shortly mention those that are using accounting information. We have owners of SME. That is number 1. The shareholders of the economic entity or business. That is the SME owners. They are number 1. They are the major that the accounting information is useful for. And number 2, we have managers, management. We are talking about managers or management. We are talking about the people we employ, those in top management. The accounting record is also very, very useful for them. Okay, then we'll move ahead and talks about the leaders and providers of finance. And these are creditors, those that are giving us some loans, loan facilities, like we have commercial bank, development bank, and mortgage bank, and so on and so forth. All these lenders, we call them lenders and providers of finance, not leaders, lenders. These lenders, they are also using accounting information because the lenders want to know your performance. You want to have information about your business. You want to have information about how you are performing. So they need your record. Okay. Then we also see government. Also, government also need the information of accounting of each business owners. These need their information. Also, we have the suppliers. The suppliers. These people provide goods and services to the businesses. They provide it, and they also need information. They invest in providing a viable and liquidity of the business, and they decide on whether or not to allow any short-term credit to be given to them. So they need the information, the suppliers. Then we have the customers. The customers, our customers also need the information of our records. As an SME owners, they need our records. Okay. We also see about employees. The employees that we have in the organization, they also need the information of our accounting record. Okay. And we have our competitors. Our competitors also need our information. These people, they need it so that they'll know what to work with. Then we also see financial analysts, and we have advertisers. The advertisers, those advertisers, they also need our information. The journalists, we have the students for their education. We have also we have other people in the public. They also, even the public, they need our information so that they can able to assess the performance of the company, of the business, or the SME. Okay, now we should know this information that these people need is very, very important, and it is very imperative to talk about the characteristic, the future of the useful accounting information we are given to them. How is that information? How is the information we are giving to them? Is information reliable? Is information comprehensive? Is information detailed? Is information objectives? Is information timely? Is information accurate? So all these are very important, and this talks about the characteristics of the usefulness of our accounting information. So we should know that all the people who have mentioned above, all the people who have mentioned before now, that they want to use the accounting information. When we talked about those who have mentioned before, we talk about managers, we talk about the shareholders, we talk about the lender, the government, the suppliers, the customers, the employees, the competitors. Then we mention about the financial analysts, the advertisers, and all these people, and the public. And we talk about the journalists, we talk about the author, we talk about the student, we talk about the public. All these people that need our information. One, what will characterize our information is this. One, relevance. Relevance. Information provided should be that is required to satisfy the need of information users. It must be relevant to the information users. It must not be information that is irrelevant to the information users. Okay? Now, that's number one, relevance. Useful for them, needed to satisfy their desire, their need, their information, which they need. Number two, comprehensibility. Comprehensibility. That means the information may be difficult to understand because it is skimpy, or it is incomplete, but too much details is also defective. That is to mean that our information should be relatively easy to understand and comprehend. We must be able to comprehend, and that is where the word comprehensibility. It is comprehensive and it can be comprehend. You can easily understand. That understanding, it is very, very important. The information we are giving should not be ambiguous, should not be things difficult to be understood, should be an information that is easy to digest, to understand, to and is complete. You can easily understand it. That is what we are saying there. Now, number three, reliability. Reliability. This will be ends if information is independently verified. That is to make sure that our information can be verified. Our information can be published by limited by 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 limited companies. Our information that we are given should be reliable, should be depended upon, should not be that we have to seek for another source before we can verify or verifying it. No, we can depend on it. Then number four is completeness. Completeness. That means we have a total snapshot of all the entire economic activities. We have a kind of full information that we needed. Then we have another one, which is objectives. Objectives. The information we are given should not be biased, should be objectives. Our information that we are given should not be sentimental, should be objectives. Our information we are given should be based on facts and should be based on reality. And the judgment should be based on the evidence of facts and problem often arising, and not on any other emotional or thoughts or thinking. No, it should be based on reality. It should be based on facts. And that is about when we're talking about objectivity of the information we are given. Then number 5, we mentioned number 5, which is timelessness, timeline, timeliness. Timeliness. That means the usefulness of information is reduced when it does not appear until long time the period to which is related. Okay, the time the information is needed and the information is not provided, then the information would not be useful again. So the information goes along with the time it's needed. Is relatively in the period of necessity of that information. It must be in the period of necessity of that information. That means the information we are given is in the period that is necessary. Okay, it will not be in the period that is not necessary again. So that all these are the characteristics. We have many of them more. Let's continue. We have comparability. The information we are given must be able to be compared with the previous period of information. Must be consistent. There must be a consistency in the information. But the time is compared must not be that there is a kind of arbitration of the information or forgery of the information. Okay, then we talk about accurate. When we're mentioning accurate, we are talking about financial information that we give must be accurate, void of errors, free from errors. In some cases, we have inaccurate information is generated because inaccurate data that is fed into the transformation process. So our information must be accurate. Okay, then we have number 8 there, which is economical. Economic information should be relatively economical. To produce, management must balance the value of every accounting report with the cost of producing it. Okay, now economical must not be too the value must not be too outrageous. Okay, then we have simplicity. Okay, accounting information should be simple and not complex. Okay, should be simple and not complex. It must not be too technical. It must be simple to understand. It must not be uncommunicative. The information should not be unnecessary and uncommunicative. Okay, that's number 9. Number 10 now. Number 10 is verifiable. Verifiable. The accounting information has to be verifiable. This means that the users of the accounting information may wish to confirm, check it to make sure it is correct. It must be verifiable, and you must have where you can able to verify it. Okay, then moving ahead, we talk about accessibility. We talk about accessibility. The information should be easy, accessible to the authority users. That means it must be obtained in the right format, in the right time, in the right place to meet their needs. Okay, to meet their needs. Okay, then we'll move ahead. Flexibility. Financial information is expected to be flexible. Okay. Okay. So let's quickly round up so that we'll round up. We'll talk about the security. The information that we give must be secure. So with this, I believe you can able to understand the importance of accounting principle in SME management and business owners. Very, very important. Actually, we've not finished this topic, but as time may permit us, we'll continue when next we meet. So we have an assignment for you. Mention 7 characteristics. Mention 7 characteristics which good accounting information must possess, and the users of accounting and list users of accounting in order of their priority. Okay, so submit these questions, this assignment to my email oluseyijohn@ymail.com. oluseyijohn@ymail.com. So I will need your response very shortly. Thank you.